Welcome to the Sand to Pearls Stock Market Commentary for week ending Friday, September 19th, 2014. Market breadth. With this past week's fractional market advance, our bull-bear point and figure ratio fell from 1.24 to 1.06, barely maintaining bullish territory. The total count of securities in bullish or bearish patterns rose 3% to 2,043. The count of bearish stocks increased 12%, while the count of stocks in bullish patterns decreased 4%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market, now 5 consecutive weeks, in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 105 points for the 6th decline in 16 weeks. At a negative 68.71 points, it continues below all 9 tops above plus 100 and continues above all 7 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 1 accumulation day and 1 distribution day. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq 100 Trust also ended in neither accumulation nor distribution mode. Momentum. The CCI 20 continued to fall and had 3 days below zero before rising, but is now outside the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 11 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. At 103.62, the CCI 20 weekly continues outside the plus or minus 50 range for a valid zero-line reject. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, brokers remains in and continues to lead the top 5. Banks continues in the top 5. Gold and silver continues to lead the bottom 5. Oil services continues in the bottom 5. Comp Tech has entered into the top 5. Bearish, REITs continues in the bottom 5. Disk drives has left the top 5. Oil has left the bottom 5. Focus this week: the 4 C's that never happened and those that did. By Mark St. Cyr, concerning some of the possible ramifications and implications of the vote for independence in Scotland. The following are some of the key points. In my opinion, we might have been shown there is even far more need to be concerned, for once again, the powers that be have seemingly demonstrated they truly are the ones in control. Confirmation it was not only more of the same, but that the world was and will be fine under their guided hands of policy dictates. For the remaining 3, that is, crisis, Contagion, catastrophe? The markets were delighted to find any hints of turmoil now brushed firmly and neatly aside. Crisis became calm. Contagion became cured. And last but not least, catastrophe morphed into an even grander state of complacency. It doesn't matter if you can logically and methodically present the case why caution should be of the first order. Even when you preface your argument and viewpoint stating fully and honestly that you understand that as of today the market has proved you wrong, expect no absolution to discuss any relevant points further, for you have now opened the doors for an inquisition reminiscent of centuries past. The only difference in days past and today is that now, instead of being placed on the rack in helping to persuade one into accepting a canonized religion, you're now placed staring down the hypothetical barrel of the Federal Reserve's money-blasting howitzer while trying tenaciously to hold on to what you believe is the equivalent of all you have left of your wealth, that is, cash. While being asked by the Inquisition panel led by Chair Yellen, "Well, do you feel lucky, punk?" What we don't need, nor want, is another bowl of the 2008-ish tripe washed down with this year's new flavored Kool-Aid. Here's what a few of us also know that we are not wrong about. When a monkey throwing darts can outperform most of today's so-called best of the best hedge funds, we're going to put our money on the monkey rather than putting it anywhere close to where these people can put their hands on it for their own personal, self-serving monkey business. This commentary prepared by Donald Pirls at www.s2pmarketsignal.com. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary. Hoping that you are enjoying a peaceful and pleasant weekend, that your return to the work world tomorrow is a good one, and wishing you true success.